Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights US President Election Special Edition for today's Daily Dose. As we know that right now the US President result polls are slowly start to trick in during today's Asia session. So very good morning to all. Today will be the 6th of November 2024, Wednesday. All right. So as usual, before we start our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. As well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so before I start, let's make sure that everything is okay in terms of the sound check and the mic, all right, and the slides. Give me a couple of seconds. Okay, I think everything should be fine. Okay, so let's start. So as usual, we know that today's will be the polling, the results polling, the results of the US presidential election, and as well as the balance of power in Congress, which is the House and the Senate. The result has started to slowly trickle in, as most of the polls are already closed in the various states of the United States. So later I'll share with you some of the insights, what are the markets are doing right now, and we also talk about this short-term technical outlook as well. And lastly, what are the key data release and events to watch out for today. So I will skip the recap of key highlights and data events that took shape yesterday, because what is taking shape right now is more on the US presidential election insights. So let us straight away jump straight to this particular portion over here. So what you could see over here is that at this point in time, if you were to go to this particular website, Bloomberg, over here, right, it should be free. All right, so this one, just go to bloomberg.com graphics 2024 US election. So we could see right now over here is the deciding vote for the US presidential election, White House, who will win the White House is whoever able to get 270 votes. As we are seeing right now, Trump is leading by 198 versus Harris 99. Right, so Trump is leading by close about 100 votes as the result. So it starts to trick it. So what you could see right now, most importantly, financial markets are paying very close attention to this betting odds. So what Bloomberg did over here is that they collate these various three betting sites. So the more prominent one is poly market over here. So red is Trump, light blue is Harris. So poly market betting odds right now is placing a very high chance of Trump winning the US presidency. That means winning the White House at 86% over here. Okay, let me go back again, 86%, whereas Harris dropped all the way down to 13%. So what we could see over here is we start to see the revival of Trump trade coming back into the picture, especially in the FX market, where we start to see a very strong dollar strength coming into place. Right. So yesterday, the dollar set back. The euro dollar, the sterling dollar, the Aussie dollar, and the dollar yen all hit the various key levels. That means the euro dollar hit the resistance, the sterling hit the resistance, the dollar yen failed to break above the support level at 155.55, and the Aussie dollar almost hitting the resistance at around the 66.80, 66.90 level before this reversal takes shape. So right now, the markets, right, in the very short term is very paying very close sensitivity to the outcome of the US presidential election rather than the macro data that is coming into place based on the intraday basis, and especially based on the live betting odds over here, okay, by the betting markets. All right, so what we could see that Trump trade is now in the forefront again, strong dollar. Then this strong dollar is impacting the major US stock indices as well, where we start to see the Nasdaq 100 and the S&P 500 futures all rallying up by 1 percentage point, extending yesterday's gain as well. So yesterday, by the close of yesterday US session, the all the major US stock indices also rallied. So the one that is outperforming for sure is the Russell 2000, up 1.88%. Why? Because the Russell 2000 is also part of this Trump trade as well. Because still recall, Trump trade is the narrative of Trump trade is higher trade tariffs, but that could potentially cause outside goods to be much more expensive than US in-house product. So that could potentially see much more revenue that is being drive into localized company that are highly dependent on revenue that is being generated from the US economy. So that actually benefit the Russell 2000, given the fact that the Russell 2000, all the component stocks, close to 80% of their revenue are dependent on localized US economy flow rather than external products itself. So the Nasdaq 100 is up by 1.32%, the SPX up by 1.23%, and the Dow Jones is up by 1.02%. So later we touch on the short-term technical outlook on both the Nasdaq and as well as the Dow Jones Industrial Average. What are the key levels to look out for? And also, not all equities are actually strongly rallying right now based on the Trump trade. The one that is underperforming is the Hang Seng Index and the Hang Seng indices, HSI, the Hang Seng Tech, and the HSCI, as well as the mainland China Asia market that's not doing that well as well, only up by 0.45%. So the reason why the Nasdaq, the Hang Seng indices are in the red because of this Trump favors Trump is called it the Trump we call it proposal of having higher trade tariffs targeting China products going into US. Still recall that Trump he wants to increase trade tariffs towards China products into US up by 60%, and as well as also do not forget that he also target an incremental increase of 10% trade tariffs on products that is coming into US, not including China, as well as the rest of the world. So he wants, in order for MNCs to prevent them to getting this extra 10% tariffs, the only way to do is that they got to set up their plants, manufacturing plants into US. So that's the intraday performance right now, taking into account of this US presidential election. Results that is already start to trick in, but market is paying more close attention to the betting markets right now that is having a very high chance of Trump winning. But however, it's still very too early to call, as you know that the results could be neck to neck. Why? Because if you look at the actual fact of the result that is coming in on the 6 swing states over here. Yeah, these are the 6 swing states. So these 6 swing states over here is Arizona, Georgia, Michigan. So let me go through one by one to them over here. So at the moment in time, it's only Arizona is only 34% of the votes counts. Where was it over here? Okay, Trump and Harris is neck to neck. And if you look at the rest over here, is that there is also no clear winning by Trump as well. From Wisconsin and especially Pence. Okay, give me. I think it's kind of refreshed by itself again. All right. Okay, let me go over here. Yes. So for Michigan and North Carolina, okay, so only things that North Carolina, Trump is leading comfortably by 51% over Harris 47%, where it has 68 of the votes that is being counted. Okay, why is it? Okay, let me go to alphabetical order. It's easier, but just now the thing keeps sweeping here and there. Yeah, North Carolina. Okay, so North Carolina over here, only Trump is leading comfortably with 68% of the votes counted. And the most important of these 6 swing states is Pennsylvania, which has the highest electoral votes of 19. So whoever wins Pennsylvania over here has a higher chance of winning the White House. So far, Trump is leading by 50%. against Harris by 48%, but it's only 50% of the votes counted. So it's still rather too early to call. So there is actually a big risk that if Harris were to catch up towards the in another 2 or 3 hours, as more votes get counted over here, the Trump trades could be dissipated. I mean, the Trump trade right now could dissipated. That means potentially we could start to see some form of dollar strength setback taking shape as we head into the London opening hours thereafter. All right, because market is right now is like a thermometer, trading very much in line with this poly market betting odds over here. All right, so but this betting odds is like it could actually totally turn reverse eruptly once we get more results coming in on the 6 swing states over here, because so far only one of the swing states, that's Trump, that is comfortably leading by 51% or 52%, with more of the votes has really counted by 70%. All right, 70% of the votes counted. But the other swing states over here, like Pennsylvania, only 50% of the votes counted. Trump, yes, leading marginally by 50%, but still too early. And if you look at the other swing states, like Michigan, all right, 70% of the votes counted. Neck to neck, Harris is only 49%, Donald Trump 48. Georgia, Trump is leading comfortably, 82% of the votes counted, 51% chance, 51% towards Trump, Harris 47%. Okay, Arizona, 47% of the votes counted, but it's neck to neck, 50% Harris, 49% Trump. Okay, so if you look at the current situation now in the swing states, especially this one called Pennsylvania over here, all right, overall there is still no clear indication that Trump is likely to win the White House. There's no clear indication yet at this point in time, but that means, i.e., as we get more votes counting in over here, there could be a much more highly volatile situation that could take place in the global markets, especially in the FX market, given that how wildly the FX market is pretty much dependent on the results of the US election. So right now, the movement of the global markets, the FX market, the major stock indices, CFD, is all primarily driven by these betting odds over here. Right, the betting odds. So these betting odds could also abruptly change as well as more results starts to come in the 6 swing states. All right. So now, with that in mind over here is that let us now jump straight into, yeah, before I talk about this movement, one thing very particular about this movement over here is that this Trump trade is not being shown up in the gold price over here. Later I'll talk about more about the gold price, short-term technical outlook. So if you look at the gold price, it still continues to trade within a sideways range. In fact, gold is actually down marginally, down by negative 0.14%. So still recall that gold is also one of the Trump trade as well. That means if Trump trade is at the forefront, gold is actually rallying very strongly in the last 2 to 3 weeks, making fresh record high. But unfortunately, gold is not very interestingly, gold is not picking up this Trump trade forefront. So it seems to us that gold is telling us a different story. So the gold market is still rather uncertain about Trump will win that potential White House. Okay, the White House race. All right. Okay, so something very interesting to watch. There's this divergence also. Who is telling the true story? The gold market or the FX market or the stock indices market? Something to actually pay attention to, because gold by right, it should rally accordingly to this Trump trade getting the forefront, but gold is not doing so at this juncture. Okay, as it's failed to actually rally. It's actually down marginally by negative 0.15% as we are speaking right now. All right, so with that, now let us now jump straight into the short-term technical outlook, starting with the FX market first. All right, so with that, let me expand my screen so that you guys could have a better view on the key levels. Okay, so let's start with the euro dollar. All right, the euro dollar over here. So if we call the euro dollar, yesterday we do have a bullish bias. All right, over here. Okay, holding above the 1.0840 level. Price actually indeed rallied, hit the first resistance 0.915, almost hit the second resistance of 0.1 1.0955. All right, it printed a high of 1.0940 during the US session before collapsing right now during the Asia session. So right now, what's interesting over here is that it's now coming very close to the medium term pivotal support level again at 1.0750. So what is 1.0750? Just have a quick recall, is the lower limit of this major ascending symmetrical range triangle that is in place since 3rd of October. All right, so what we could see over here is that there is no point for me to go outright bearish now on the euro dollar, given the fact that it already come close to the medium term pivotal support level that has still doesn't have any signs of breaking down below it. As we are speaking right now, this is an hourly chart. What we could see is that this pivotal support here on 1.0750 on the euro dollar is still being well respected in a sense. Why? Because the price action right now is showing a doji-like, hourly-like formation on the euro dollar. That means, i.e., the bears are rather hesitant to actually push it down lower to 1.0750. So given that this level of pivotal support has not been taken out, but likely they're going to be very wild swing taking shape going into the London session opening as more votes are being counted. So I'll actually flip to a neutrality stance instead. So neutral between 1.0870. So this is the upper limit to watch out for as we head into the London opening hours thereafter at 1.0750 on the euro dollar. So only clear breakdown below 1.0750 means an hourly close below it, then there we will start to see exposure of intraday weakness on the euro dollar to expose the next near-term support level at 1.0710 and 1.0670 next. So 1.0670 is in fact the minor swing low area of 14th of June and 26th of June this year. But however, if price action managed to reverse up and have an hourly close above 1.0870, then this potential mean reversion rebound scenario on the euro dollar should resume its strength to revisit 1.0915 and 1.0940 / 1.0955 on the intraday basis. Okay, so that's for the euro dollar. So right now, let us now focus our attention to the sterling dollar. So the sterling dollar still has some, yesterday we do have a bullish bias as well, looking for it to actually go up towards the resistance level at 130.60. So almost hit 130.60, printed an intraday high of 130.48 during the US session before it reversed downwards over here at this juncture. Okay, so what we're going to have over here is that there is potentially still some form of weakness that could actually take shape on the sterling dollar as it hasn't reached the 200-day moving average. Okay, the key support level at this juncture. So with that, potentially there could be see some form of bounce taking shape, as we know that the sterling dollar has really reached the support oversold level on the hourly RSI. So first resistance level to watch will be 1.2935 with a short-term pivotal resistance that I have in place for today at 113.15 level, 113.15 level, so very close to the 20-day moving average, acting as a resistance level as well. So as long as 113.15 short-term pivotal resistance didn't surpass on the upside, potentially we may see a bit of a much more residual weakness on the sterling dollar, exposing the next near-term support level at 138.60, followed by 138 figure level. So do watch closely the 138 figure level. So if it comes close to the 138 figure level and it starts to shape that bullish reversal candlestick formation on the hourly time frame on the sterling dollar, potentially we may start to see another volatile bounce towards the upside instead. All right, at this 138 figure level as we head towards the London opening session thereafter. All right, so but however, instead of coming down to what hit 128, but if it starts to bounce up from here instead and have an hourly close above 130.15, then this residual bearish bias on the sterling dollar will be invalidated to see the continuation of the mean reversion rebound heading up towards 130.60. Above it sees 131.07, which correspond to the 50-day moving average, acting as a resistance level as well. All right, so this will be for the sterling dollar. Now, that means i.e. Flip to a bearish bias below 30.15 for a potential residual weakness on the sterling dollar going forward into the opening hours of the London session today. Now, turning our attention will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. So the Aussie dollar, yesterday we do have a bullish bias looking up towards the 60-60 level, 66-60 level. So almost hit 66 before shaping that sell off during the Asia session right now as we are speaking. So right now what we could see over here is that it starts to actually hit this support level already. So this support level very uniquely, right, is actually this pullback line of this former descending trend line resistance. Okay, this pullback over here. So since hitting this line over here, and right now it's trying to form a hourly hammer formation because the hour hasn't closes yet, and graphically there is this two graphical support level that is pointing, allow it two different graphical support level, minor swing low of 30th of October and 1st of November, as well as the former descending trendline resistance from the high of 1st of October, indicating some form of pause in the intraday sell-off that we see so far on the Aussie dollar. So given this potential pause that is taking shape and a impending bullish hammer formation on the hourly candlestick of the Aussie dollar, so there is no reason for me, there is no conviction for me at this point in time to have a bearish bias. So instead I will have a neutrality stance right now. So I'll flip to a neutrality stance between 65.40 on the Aussie dollar. Okay, 65.40 over here. Let me put it. Yeah, so make sure that is the correct color. Yeah, 65 for neutral between 65.40 and as well as between today's Asia session high at 66.45. Okay, so neutral between 66.45 and 65.40. So only we have an hourly close below 65.40, then I could validate that potential residual weakness as we head into the London opening hours to expose the next near-term support level at 65.20, 65.10, followed by 64.75, 64.60 next. So 64 is a Fibo extension cluster level over here, and as well as this minor swing low of 7th of August. Okay, so that's for the Aussie dollar. So rather mixed right now, flipping to a neutrality stance instead, lack of a bearish conviction on the intraday bias because of the price action that is bouncing right now at this at this support level that is being confluenced by two graphical elements at 65.40. All right, so now what's up next for the dollar yen? So the dollar yen, right, as usual, it actually right now trying to play around that is 1538 minor congestion area. So yesterday we do have a bearish bias on the dollar yen with the first support level coming in at the 155.55 level. So price action hit during the US session, but can't have a proper breakthrough and managed to stage a rebound right now. All right, so what we could see right now over here is that it's coming very close to the 154.7, 154.80 level. So what's this level? This level is rather important graphically on this daily time frame. Okay, so I go to the daily time frame over here. So in fact, right now this is my medium-term pivotal resistance level. Why is it important? Because if you look at graphically at this point in time, from the minus the swing low area of 15th of May this year and 4th of June, this is the daily chart, price action previously supported, then thereafter it has a breakthrough. Then after that breakthrough, it rebounded, retested again. Then after this last retest at 154.70, it managed to state that rather drastic sell-off. Okay, what I could see is that this very steep 1, 2, 3, 4, 5 day of steep sell-off after hitting the 154.70 level. So based on a technical analysis perspective, market participants do have a particular memory at this 154.70 level that it previously was a support level, break that support level, retested it on 30th of July, and that induces that very fierce 5 day of consecutive sell-off. And what we could see over here is that the RSI also start to shape a bearish divergence in the last 3 days before today's pivotal day, which is the outcome of the US presidential election. So with that, right, with that, this level is indeed key. So only a clear breakout of this level, then I could validate a potential bullish buyers, okay, at this above this 154.70 level, right? And if you do the Fibo retracement over here, okay, that coincides also very closely to the 61.8% Fibo retracement, slightly above it as well. So with that, I would have no conviction to actually be ultra bullish right now on the dollar yen. So instead, I will have a neutrality stance over here. So let me put it over here. Let me adjust the level again. Okay, let me push it up here. Okay, neutral between here. And what I'm going to do now, okay, let me put it in a better way on the intraday basis. Okay, let me put it all the way up here. Okay, so let me predefine the lower limit. Okay, so this will be my lower limit. Okay, at 152.40. Okay, so flipping to a neutrality stance between 154.70/80 and the lower limit, it will be this 152.40 level. All right. So if the price action on the dollar yen starts to erratically come down again, because right now it's coming to the 147.70/80, and right now could see is that we start to form this kind of doji candlestick as well, a bit of hesitant by the bulls to actually push up above the 154.70/80 level. And if price action starts to trip down from here and kind of have an hourly close below 152.40 as more of the voting results come in for the US presidential election, because right now all the markets are pretty much dependent on the outcome of the US presidential election. So if the result is being too close to call, that means Trump doesn't have a decisive victory due to that, that swing states over here that is still showing no clear indication of Trump winning, especially Pennsylvania, then the dollar strength could potentially dissipate as we head into the London opening hours. So if price action starts to come down at an hourly close below 152.40, then the dollar yen could actually see some form of weakness coming back again. First support level to watch, indeed this level 151.55/30. Only a breakdown below 151.30 could expose more weakness towards the next near-term support zone at 150.60/30. All right. So however, if price action going to push up above the 154.70/154.80 level, then this very steep we call it rally could actually extend to visit the next intermediate resistance in first step at 156.20. So what's 156.20 over here? So 156.20 is in fact this congestion area here, very minor congestion area, 18th of July and 24th of July. Right. So that's for the dollar yen key levels to watch out for. So given that it's coming very close to a medium-term pivotal resistance, we'll flip to a neutrality stance instead between 154.70/80 and 152.40 for the dollar yen. All right, so with that, that actually sum up the intraday technical outlook on the major FX dollar pair. So let us now turn our focus now to the major stock indices, starting with the Hong Kong 33. So Hong Kong 33, no change. Yesterday, still recall, we do have that pivotal resistance at 21,050. So price action reacted nicely off it, staged that bearish reversal. So this will be still indeed a short-term pivotal resistance that we have for the Hong Kong 33 since the start of this week. So we still maintain that intraday bearish bias for the Hong Kong 33, i.e. the Hang Seng Index. So 21,050 will be my short-term pivotal resistance level. First support level to watch still remains unchanged, 20,150. Only a breakdown below 20,150 will see further weakness on the intraday basis on the Hong Kong 33 to expose the medium-term pivotal support at 19,790/19,445. Okay, so this is a pivotal support level. We predefined it earlier. We also coincide with the 50-day moving average. So very interestingly, because right now price action is very volatile. If price action hit this pivotal zone pivotal support zone at 19,790/19,445. Do watch out for any signs of a bullish reversal candlestick forming. So this could be an inflection point where potentially price action may flip to a bullish bias again. All right, and also why do I say that? If you were to look at the Hong Kong 33 on a daily basis, right, whatever price action that is forming right now, okay, so this is the pivotal support level over here, the pivotal support zone. Okay, this formation here, right, from the sell off that took shape from 7th October all to the current price action, it seems to be still inside this kind of bullish flag formation on the daily time frame. Okay, on a weekly time frame, pardon me, this is a weekly time frame, not there. This is a weekly time frame. So on a weekly time frame, from 7th October all the way until now, whatever price action that is showing this kind of a sell off, it's not convincing for me to state it's a start of a topish major topish formation, but rather a bullish flag that actually doing some form of retracement on that previous 3 sharp rally that we see so far on the week of 16th of September. And also do recall that this coming Friday will be the end of the MPC standing committee meeting, and very likely market participants will want to hear what will be their fresh physical stimulus amount. So market is now putting it at a range from 2 trillion to 10 trillion, and most importantly, where this physical stimulus where this fresh physical stimulus from China is to be allocated. All right, something to take a note of. But we are now taking things one step at a time. All right, still having that bearish bias on the intraday basis. These are the key levels to watch on the potential downside. 20,150, maximum 20,790/445. And once price hit this level here, watch out how the price action react at this level. All right, from here. Okay, so this is the key technical, we call it elements that I want you guys to actually take a look out for as we head into this volatile session today and into the next 2 days as well for the Hong Kong 33. Okay, so with that, however, if price action starts to bounce and break out above 21,050, then with an hourly close above it, then today's intraday bearish bias will be invalidated to see a potential squeeze up towards 21,550 level. Okay, so that's for the Hong Kong 33. Now, turning our attention will be the Japan 225. So the Japan 225 has a squeeze up over here. So what I could see that this Japan 225, right, since the start, the low of 27th of September, it's been trading inside this complex range configuration. So yesterday we do have a bearish bias looking for it to come down towards the lower limit of that range, complex range configuration, but price action do not actually come down, and instead it rallied up and broke above the pivotal resistance level, okay, that we have yesterday at around the 38,700 level handle. So with that, we will flip to a intraday bullish bias within this complex range configuration, as we know that the price action right now has already hit the price action on the hourly RSI hit the overbought level over here. Okay, so what we could see now is, okay, give me a minute. Oops, where is it? Okay, so this hourly RSI, it doesn't have a bearish divergence. So what I could see over here is that means there could be no there is lesser chance of a more severe severe pullback that could take shape instead. All right, so price action could continues to actually potentially march up and revisit the upper limit of the complex range configuration at 40,155/280, potentially based on the current hourly observation that's being seen on the hourly RSI without any clear bearish divergence. But it's really hit the overbought level, but so potentially there could be some form of minor pullback as well, because it hit the first resistance level at 29,550/29,680 level mark over here. So the pullback support level to watch out for will be this level here at this 39,100 level. maximum 38,670, which is my short-term pivotal support that I have for the Japan 225, Nikkei 225 for today. So as long as this pullback didn't surpass below 38,670, we will flip to an intraday bullish bias towards the within this complex range configuration. Next resistance level to watch out for will be 40,155 slash 40,280. Only an hourly close below 38,670 will invalidate today's intraday bullish bias to open up scope for it to revisit the lower limit of that complex range configuration, exposing the next near-term support level at 38,265, followed by 37,780 next. Okay, so that's for the Japan 225. Now, turning our attention will be the German 30. So what you see the German 30 over here, right? Very interestingly, let me put it all over here. So right now, there's actually a bearish reaction of the 20-day moving average over here, and also this particular zone here as well. Notice here, previously this zone support breaks, pullback resistance, can't have a breakthrough, and it came back down. It's went back down again. And if you will do the Fibo retracement from the last push down, from 29th of October all the way down to the 31st of October, it corresponds to the golden ratio at 61.8%, right? 61.8% over here. So what you could do over here is that means at this zone, there is some form of sell off that prevent the bulls from pushing up. Okay, at this point in time, right? So with that over here, that means there could be a potential we call it a setback, at least on the intraday basis, to revisit this near-term support level at 19,110, 19,020 level, which we highlighted yesterday as well. Okay, that price actually managed to bounce off from here. So with that, I will have an intraday bearish bias to play along within these key levels. So I don't want to put this level as my pivotal resistance zone because it's very because due to potential whipsaw, I'll have a higher level instead at 19,150. Okay, on the German 30 over here. So let me put this as a short-term pivotal. All right. So using 19,510, okay, slightly above this level. Okay, so if this 19,710, if we do the Fibo retracement, okay, is the 76.4% Fibo retracement over here, and also the minor congestion area of 29th and 30th of October. So 19,510 will be my short-term pivotal resistance level on the German 30, still maintaining that intraday bearish bias due to the current bearish price reaction of the 20-day moving average and of the 61.8 Fibo retracement, and this graphical congestion area over here previously on 23rd of October and 28th of October previously supported breakdown turns to a pullback resistance level. First support level to watch out for 19,110, a breakdown below it, revisit the last Thursday minus swing low at 19,020. Only a push out with an hourly close above 19,510 will invalidate our intraday bearish bias on the German 30 to see a further squeeze up to revisit the current all-time high zone at 19,690 slash 19,755 in the first step. So that's for the German 30 or the German DAX. Now, turning our attention will be the US Wall Street 30 over here. So the US Wall Street 30, what we could see over here is that price action right now has started to squeeze up above the 20-day moving average over here. So what we could see potentially at this juncture, there could be still some form, okay, price action, there could be some form of residual push up at this juncture over here towards the 40,060 level. All right, so with that, this 40,060 level, if I do the Fibo retracement, okay, that correspond to the 76.4% Fibo retracement. So with this because price action, because previously when I start doing the technical analysis, right, it was somewhere around here, because instead of doing that pullback, it starts to squeeze up. So given this form of so-called very little push up, more left to go, and with the hourly RSI at this extreme overbought level, there's no point for me to be outright bullish right now, given that it's only a few more pips to go over here, to go few more 100 points to go to 40,060. So with that, right, I will instead flip to a neutrality stance instead on the US Wall Street 30. So neutral between 40,060 right now. And the lower limit, what I'm going to do now, let me redo everything again, given the current price action, I really do that short push up. Oops, sorry. Yeah, this level here, which is close to the 20-day moving average and the former minor swing high area of 28th of October and 31st of October that push up and managed to induce this 3 hours of bullish vertical push, all right, by the price action of the US Wall Street 30. Okay, so this will be beyond lower limit. Okay, so let me adjust it again. This will be 516. Okay, 516. Okay, now let me explain my rationality of why I flipped to a neutral limit, because previously the price action was here when I do the technical outlook, right, looking for a push up to hit the resistance level at 40.60, because price instead it didn't actually do that pullback. Instead it just shaped this 2 hour of vertical push up and now coming very close to the resistance level that I already highlighted. And what's interesting over here, the price action starts to form this kind of doji candlestick like formation, a bit of hesitant by the boost to push it higher. So with that, given a very little more room to play, I will actually flip to a neutrality stance right now, instead of being outright bullish on the US Wall Street 30 on the intraday basis. So neutral between 40,060 and 42,516. Over here, if price action starts to come down and have an hourly close below 42,516, then the odds right now will flip back to the bearish bias again, the bearish camp, on at least on the intraday basis for the US Wall Street 30, to revisit this next near-term support level at 42,325. Below it, potentially sees 41,000, 41,930. All right. Okay, 1 second. Let me adjust everything again. Okay, I think there's a lag over at my computer over here. Okay, 1 second. Let me put it everything. Okay, so this one over here should be 43,000. Okay, let me repeat. Okay, so neutral between 43,060 and 42,516, which confluence with the 20-day moving average as well. So only a push down with an hourly close below 42,516, then the odds will flip back towards the intraday bearish camp, potentially exposing the next near-term support level, 42,325. Below it sees 41,930, which confluence very closely to the 50-day moving average as well. All right, so that's for the US Wall Street 30. And right now what we're seeing is the Nasdaq 100. So very similar as well, the Nasdaq 100 also squeezed up above our pivotal resistance level yesterday at 20,295. And what's interesting over here is that very similar to the Dow Jones, it's now start to show that hourly doji candlestick right at the next resistance level that we highlighted yesterday at 20,560 / 20,615, which is this congestion zone over here. All right, from the 25th of October, and that failure bullish breakout that was seen earlier on 30th of October before that sell off took shape at this point in time. And we do that Fibo retracement on the last push down from 30th of October all the way down to last Friday low. Okay, the price action also seems to be hesitant at the 76.4% Fibo retracement on the Nasdaq 100. So with that, given that it's coming back, there is no very strong bullish conviction for me to actually see a bullish breakthrough above the 20,615 level at this juncture, given the hourly doji candlestick that is potentially forming right now. I will actually flip to a neutrality stance instead of, so flipping to turning neutral right now on the Nasdaq 100 as well. Okay, so neutral between 20,295 and 20,560 / 20,615. So only a push down and we start to see an hourly close below 20,295, then that would switch the focus back to the intraday bearish camp again to expose the next near-term support level at 20,136, followed by yesterday's Monday's and Friday minor swing low area at this 19,910 on the Nasdaq 100. All right, so given this formation of this impending hourly doji candlestick showing a bit of hesitant by the bulls to actually push up higher above 20,560/20,615, we will flip to a neutrality stance instead and watch the lower limit of the neutrality level at 20,295 on the Nasdaq 100. All right, so that's actually sum up the key intraday technical outlook bias and the technical levels to watch on the major stock indices. So now let us turn our attention very interestingly to the commodities market, starting with gold XAU/USD. Still recall that gold is the only asset class that is not moving in line with the Trump trade narrative. So you recall that the Trump trade narrative gaining the forefront in the last 2 to 3 weeks, where we see dollar strength because of higher US Treasury yield, and the gold also rally as well because Trump policy will widen the US budget deficit much larger, increasing the risk of what I call that kind of government shutdown going forward that could potentially see some form of credit warnings on the US Treasury bonds or notes. So that could actually potentially benefit gold instead. So that's why gold was rallying in the last 2 to 3 weeks along with this Trump trade in the forefront. But very interestingly, given that the Trump trade narrative has started to actually trigger back up into the market in the last 2 or 3 hours ago, because of the predictive market is actually the betting market is showing a very high odds of Chan winning. But what's interesting that gold is not being reflected, okay, on this Trump trade. So perhaps is gold telling a better picture? But we shall see, right? Painting a better picture instead. We shall see. But no change in the key levels on gold XAU/USD. Still recall since the start of this week, we flipped to a bearish bias, looking for the continuation of this kind of mean reversion rebound that has really taken shape potentially since last Thursday. It came down, and from Monday onwards, it started to trade sideways over here. So what you could see over here is that it can't break above the first resistance at 2,758 that we highlighted earlier. So we use a slightly higher level at 2,774 as my short-term pivotal resistance. So still remain this 2,774 as my short-term pivotal resistance, still maintaining that intraday bearish bias for this mean reversion, potential short-term minor mean reversion rebound to actually extend within its short and medium term uptrend phase of gold, because gold is still trading above the 20-day and the 50-day moving average. So a breakdown below 2,715, which is the 20-day moving average, potentially see a residual push down to expose 2,684/2,667. So this support zone also coincide closely with the medium term ascending channel lower limit that is in place since the low of 8th of August. Over here, so only a push up with an hourly close above this 2,774 level will invalidate the extension of this mean reversion minor corrective decline sequence to see the return of the impulsive up move on gold XAU/USD. Next resistance level to watch 2,800, followed by 2,826, which is the upper limit of this medium term ascending channel, also confluencing with a bunch of Fibo extension cluster level. All right, so that's for gold XAU/USD, a very interesting level to interesting asset classes to watch. It does not follow the Trump trade narrative at this moment in time. Okay, so now let us now take us to the last commodities market that we tend to pay a focus attention to on a daily basis will be West Texas crude oil. So still recall that West Texas crude oil yesterday we will have a bullish bias. It actually hit exactly our resistance level at 73.15 level over here. So and also how the way it hit over here, it causes the RSI right now to actually inch downwards, and after that it print a series of lower low over here. Okay, lower low. So and now it's actually bridging the 50 level mark as well on the hourly RSI after printing a series of lower low, right? So what you could see, that means there's lack of upside momentum at this juncture for West Texas crude oil on an intraday basis after hitting the resistance level at 73.15. So we'll be using 73.15 for today as our short-term pivotal resistance level, flip to a intraday bearish bias for West Texas oil. First support level to watch will be 70.80. Let me put it in writing over here. 70-80 level. A breakdown below 70-80 exposes the next near-term support level that managed to shape a bounce during the start of today's this week Asia session on Monday at 69.50/68.85. All right, so these are the two intraday near-term support level to watch as we flip to an intraday bearish bias for West Texas crude oil. However, an hourly close and a push up above 73.15 will invalidate today's intraday bearish bias on West Texas crude oil to see a further mean reversion rebound taking shape within this major descending triangle range configuration that is in play for West Texas crude oil to expose 75.20 followed by 76.70 next, which is the minor swing high of 10th of October and the 200-day moving average. So before we go, let's have a quick look at the West Texas crude oil on the daily time frame. So this is the major descending triangle range configuration that is still in play since the low of 20th of March 2023 for West Texas crude oil. All right. Excuse me. So that sum up the intraday technical outlook on the major cross asset classes. So before we go, let's have a quick look at the results of the US presidential election again. So this is updated live. All right. So Trump is 2110. Harris is 113 so far. So let's look at the swing states over here. Right. So swing states, North Carolina, Trump is leading with 85% chance of the 85% of the votes being counted. 50% Trump is leading. Pennsylvania, the key one, Trump is leading as well. But only 66% of the votes counted so far. Then what we have next? Okay, Wisconsin, Trump is leading. 57% of the Trump that's counted so far. And okay, Arizona, Trump is leading as well. Right, so it seems to us that so far so good. Trump is actually holding the swing states pretty much comfortably right now, leading by marginally over Harris. But the key one to look out for is this particular state of Pennsylvania, because Trump is leading marginally, not that far, not that not that much. It's only 50%, with 66% chance of the vote being counted at Pennsylvania. Okay, something to take a look out for over here at this juncture, and also the Senate and as well as the House, because so far right now, the House Republican is leading by 149 seats versus 96 over here. So will there be so there's a big risk over here because Senate right now is actually comfortably in the Republican 48-37, because if you look at Senate over here, as long as it goes down to 50, which is very high likely it would based on the polling market, the Senate will be strongly in Republican. All right. So now the next one will be the House over here, which is leading by 150. All right. You got to hit 218 seats. So let's say if the Republicans also manage to control the House, and let's say Trump also wins the president, the White House, that means we have a clear Republican sweep. And this clear Republican sweep over here, because it's actually, fundamentally speaking, it's not so rosy for the stock market. Why? Because still recall Trump wants to have a trade tariffs together with corporate tax cut. Then we got to see how does he prioritize his policy. With this trade tariffs coming into play, potentially in the medium term perspective, it should potentially see a bit of negative reaction from the stock market, especially on the Nasdaq 100, that most of the component stock within the Nasdaq 100 dependent on their revenue externally. All right, so there could be also see retaliation from other countries like China with this Trump proposed higher trade tariffs. All right, so this is the US presidential election result so far. And on the economic calendar, I think market will be more fascinated with the results of the US election as more votes starts to come in as we head into the London opening hours. So we also need to actually pay attention to any key data that is taking shape for today as well. So for the key data to look out for today, right, is more or less what we could see over here is ECB President Lagarde's speech at 10 p.m. Singapore time. And during the US session, it will be rather quiet. And also, we got to see towards the closing hours of the Asia session, we also have this standing committee of MPC standing committee meeting, China MPC standing committee meeting, to see is there any reported news coming the local press that indicate any form of reaction from this standing committee meeting with the outcome of the US presidential election result that could actually shape the movement of the Hang Seng Index and the China stock indices during the closing hours of the Asia session. All right, so with that, that sum up today's daily dose of market insights. I'm Kelvin here. Wish you all a great day ahead, and we shall speak again tomorrow. Thank you.